Welcome to today's webinar, which is a CFO's role in an IPO process. My name is Phil Scott, Director at FD Recruit, and I'm joined today by 4 expert panelists who'll be sharing their knowledge of completing IPO processes. We're going to run through a main set of questions and then we'll open up to Q&A at the end. So if anyone has got any questions they'd like to put to the panelists, please pop them into the chat box located at the bottom. So let's go over to our first speaker, our first panelist, Laurie Headley. Do you want to just give us a quick overview of your background and your IPO experience?
Sure. So I'm Laurie Headley. I was 16 years at PricewaterhouseCoopers and one of the people that you would pay to come and help you in the IPO process in those days, and did several UK, US and a few other overseas markets. Then I went into industry, and the main part from industry is I IPO'd a business 2 years ago called Sensign, which we IPO'd onto the AIM market, raising 60 million in the process. And that involved quite a lot of kind of complex structuring, etc.
If I just go over to David Bottrell. David, would you like to give the listeners a quick 60-second overview of your background and your IPO experience?
Okay, thanks Phil, and good afternoon everyone. I think my background is probably somewhat unusual compared to most people in that I actually knew I wanted to be an accountant. Most people seem to get into it by accident. I left school at 16, did A-levels and the professional qualifications through Dairy Lease. Started out at a private company, then moved to ASDA, and after that a number of PLCs, ultimately getting to FC level, and then FD roles in a US listed company. So experience both from the regulatory side, both sides of the pond. Been operating in the chemical and pharma and biotech sector since 1990, and in 2006 I moved into renewables, which is the area where I did my first IPO.
Ewan, if you'd like to give everyone a quick 60-second overview of your background and your IPO experience, that'd be great. Over to you, Ewan.
Right, well, I'm a chartered accountant, trained Big Four, spent a spell in the corporate finance department, about 6 or 7 years, then into industry with smaller companies. IPO-wise, I was CFO of a company called Deltex Medical, which we listed on AIM back nearly 20 years ago in 2021. And then so it was a primary listing there, but also a large number of secondary fundraisers whilst on AIM. More recently, I'm working as a CFO with a company which is looking to IPO a tech business in the next, well, it had been next spring, but because of COVID, it's pushed back a year, but still working on the pre-marketing side.
Leslie Jackson, if you just want to give us a quick overview of your background, your IPO experience.
Good afternoon. Thank you for joining. I'm Leslie Jackson. I'm a chartered accountant. I trained with KPMG and then I left to join industry. I've been involved in a couple of IPOs. I completed a premium listing on the London Stock Exchange in 2013 for my former company Stock Spirits. And I've more recently been involved in supporting a small AIM listed company in getting their initial listing and then raising additional funds on that stock exchange earlier this year for an acquisition. I've also raised an equity raise for a public company when I was the finance director for them out in India, and that was on the Bombay Stock Exchange. So those are my experiences.
So Leslie, what is an IPO?
An IPO is effectively an initial public offering, which means selling your shares on the stock exchange effectively for the first time. So if you're looking for an exit route and your shareholders wish to look at various options, one such option is an IPO, which is an initial public offering, which means going through quite a detailed process to prepare a prospectus to sell your business or some of your business on the stock exchange. It means listing some or all of your shares. There's a number of different markets. It can be AIM, it can be the main market, it can also be in different countries, but it's one form of exit or one form of raising funds.
Ewan, why go public? Why choose an IPO over other forms of equity raises?
Well, it depends where you are. I mean, for some people, an IPO is an exit. So particularly the sort of PE venture capital type of investor, because it puts liquidity into the shares and they can sell their shares after any lock-in period. I would stress that for management, it isn't an exit, because you get very restrained, if not by the law or the rules, but certainly by practice as to when you and if you can sell any shares. So really, I think for me, for most people, it's a fundraising activity, and it's really about where you're going and where you can do it. I think IPOs are great for raising money, but you need to be sure that you can raise enough at the right price, and that you're not at risk of your value going down as you need more capital, the price going down when you need more capital. So it's it's horses for courses, and it's a bit of a punt, and it all depends on what you want to do in the future.
And David, what are the major factors to consider when exploring whether to go public, and how involved is the CFO in this?
I think the major things around going public are the changes in the regulatory environment, the additional new regulations that you have to comply with, and the internal processes that you will need to respect, and external reporting that you need to respect, and what the greater formality. So far as the process of running an IPO is concerned, a very, very large portion of that will fall on the head of the CFO. There's an awful lot of detailed stuff. There's regulatory things, there are legal things, there are financial things, and the CFO in many cases is going to be the glue that pulls everything together until you go on the roadshows, and then the CFO, along with other members of the management team, will be the ones doing the selling process to the potential investors.
Laurie, how do you decide which market to go on?
You ask lots of people for their thoughts and their views, and you will get more than probably one view from every person you ask. The right market depends on what you need as a blend. The first thing is shareholders and access. You will get different shareholders on the AIM market in London to the ones you can get on the main market. You will get different shareholders and access to capital on NASDAQ and various other ones overseas. So where can you get the shareholders that are right? Then you've got to consider what the requirements are of the market. AIM has the lowest in terms of requirements in the UK, and therefore, relatively speaking, easier, less cost. At the same time, there can be a reason you want to go to the main market, but you just need to be conscious that that has a higher bar. Something like the US and NASDAQ, you can do. It just has reasonably different rules. And again, you've got to be ready for the fact that you've got to set the company up in the right way for the market that's right for you.
And Laurie, what are the tax and accounting considerations?
Tax and accounting considerations are a long list that's almost never ending. The accounting part is usually IFRS, or if you're going to the US, there's an element of US GAAP that may come into it. The accounting, I would say, give yourself a bit of time to plan it. It could be quite easy, depending on your business, to get the right accounting in place. It can be a process that can take 3 months plus, and I've been involved in some of those previously. On the tax side of things, no two situations for any companies listening the same when it comes to tax. It's not often I would want to say this. Get your tax advisors involved early on. The earlier you plan for the tax side of things, the better.
And Ewan, what are the corporate governance considerations?
You do need a board, and you need a board that's going to be credible. I mean, I think for me, the key appointment, if you've got a management team, an executive team sitting there, the key appointment is the chair, and the chair and/or the senior non-executive director. That they are, I think, certainly when you've got institutional investors, you need to have someone who isn't the executive who they can speak to. So that's really important. So they need to be people who understand the business, but really also understand the way that the stock market works, and the way that investors think, and the way the institutions think, and how the relationship with a broker, particularly if you're on AIM, where the broker's also typically the nomad, the nominated advisor, and got some regulatory oversight. But those sort of senior people who've been there before, who are also a safety valve from the management team, are very important.
And Leslie, anything to add on corporate governance?
In terms of just overall structure, a lot of things that you'll probably already have in place around processes, delegation levels, authorizations, those will just need to be beefed up. But there's a lot of regulations to learn around things like insider trading, market abuse regulations, Obviously the UK Bribery Act, those all come to the forefront, and you'll need to work out how you adhere with those. Unfortunately, there's not a situation where you can just leave it and get round to it in time. Once you're on one of these markets, all of those regulations apply to you from day one. So you have to work out how you're going to be compliant from day one.
And Laurie, do you need to do a pre-IPO reorganization?
The answer is almost always yes. It can be simple. It can be just a top co that becomes a PLC. That might be all you need to do. But chances are you'll need to do a level of legal and financial restructuring to make your vehicle the right vehicle for listing, i.e. the one that's right for the people that want to invest in your business. That can be quite complex. Again, plan that part early on, and then it becomes part of the process. If you don't, what does happen is it tends to become ad hoc and reactive, and those rarely work out well.
And David, do you agree?
In our case, we did. We moved to be a PLC without a listing as part of the preparation of actually going for the listing. Going to the PLC gives you some more additional obligations in terms of reporting and things, but one significant factor that's probably worth mentioning is that if you go to a PLC and then you decide that you no longer wish to be a PLC, the process of deregistering and going back to being a limited company is quite a bit more complicated than it appears. So if you're going to go through that route of converting to a PLC or putting a topco in before you do that, be aware there can be a fair deal of work to do if you wish to change your mind and go down a different route.
And Ewan, how do you value a company for the IPO?
Number of sources. Ultimately, it's whatever the market will take. And if you follow the news of IPOs, quite often you get very late price adjustments to expectations. I think from the CFO, the management perspective, it's what really matters is trying to determine who sets the price. So if you can control that as much as possible, you're more likely to get a deal away at the price you think it's worth. If you now get a big institution coming in, or a couple of them at 12-15% of the expanded capital base, then you're very exposed to them setting the price. And you have a wobble in some country you've never heard of, happens overnight at the last minute, and suddenly the price will get bombed, and it's too late to pull it, and it's difficult. So I think try and control it, try and set the price as early as possible. But you've always got a risk there. But of course, that's the price is really important to the people who exit. Well, at the moment you've got the thing done, what matters is the future performance and where you go from there. So if your management are not selling, actually a lower price is probably better in the long run. A lower price with slightly less stretched expectations is probably the ideal place to be sitting at.
And Ewan, how long does the process last, and does it always run to predicted timescales?
I think most people say 6 months. There's probably 3 months which are quite intense. And between that, there's sort of pre-marketing and preparation and bits of legal and things like that. So from the CFO's perspective, you need to make sure that your historic numbers are in shape and that you've got some accountants who will be prepared to sign off on them, auditors. So that just needs to be done. But I mean, to my view, you should be in that sort of state anyway if you're in a decent growth company. For looking, you do need to make sure your forecast models are up to scratch. And really make sure that you're on top of the cash and what the cash requirements are going to be if you're raising money. But after that, it's once you've appointed a broker, it's the marketing itself. The core effort is probably most things 1 to 3 weeks, probably normally around 2 weeks, which would be a roadshow and very intense, going around meeting lots of institutions, making your pitch onto the next one, and hoping then that the broker's building a book and you get the deal away.
And Leslie, anything to add on timescales, and what about delays?
It's a really detailed process, and the problem is that when you stop, it's really difficult just to start again, because a lot of stuff needs to be started from scratch. So if you do need to delay for any reason, there can be quite a high level of rework. Certainly we had that instance with my company. There was a change to the environment we operated in with a major regulatory change, and we had to halt the process for a month or so. And it just meant that there was a massive amount of rework. And that's just really difficult.
And Leslie, how do you select advisors? What advisors do you need? What advisors don't you need? What's the criteria that you'd use?
Oh, that's a very good question. When you're going through a process like this, you become extremely popular with all sorts of advisors. You will need a firm of reporting accountants. They don't have to be your auditors, and in some respects, it's probably better they're not your auditors, because otherwise they may be in conflict in terms of their level of independence in the process. You will need a firm of brokers or a nomad in the case of an AIM listing. And you will need legal advisors. Those are the absolute minimum. You may need remuneration advisors for your appointment of your board. You may need some other advisors for particular aspects of due diligence. When you're putting your due diligence together, there could be environmental health safety advisors that you need to use. But there are also a number of other advisors that will creep out of the woodwork and come and tell you they offer something special. We had the situation with a firm that we couldn't really see what value they would add, but they got very friendly with our private equity owners who insisted we use them, and all they basically provided for us was a set of PowerPoint slides on a weekly communication call. But they got in the way and they cost us £750,000, and frankly, they added no value to the process at all, they just hindered it. And there's plenty of those firms around.
And David, how do you source the IPO team from within the organisation?
I think that depends on how large your organisation is. If you're looking at the base level, you're going to be looking at CEO, CFO, and then technical, if appropriate, maybe business development. But you then need to think about formal public relations. Is that going to be internal? Is it going to be external? Investor relations expertise, the same question there. All those areas are things that some of it can be done if you're a smaller organization by outsourcing. If you've got a large company already, you've probably got those skills in-house, and those people will get pulled into the entire process and will take part in the process for creating a little bit of a stir before you start doing your roadshows and get listed.
And Laurie, what's your thoughts on the IPO team?
For start, the IPO team is going to be everyone. To some extent, almost everyone in your organization is going to have some level of involvement. But for getting the core team together, you've got to get the right blend of people with skills and experience, the financial, the legal, the tax, the operational, the commercial side. But I would also say, don't be afraid to think about getting help for your team in the short term. So for example, one thing I did is I went and got somebody in short term that used to work with me to help just for the IPO process, just because of the sheer amount of work that's going to be going on. It's going to be intensive.
And Ewan, do you offer the IPO team an incentive, and is there anyone else that you'd incentivize?
Tricky. It depends what you're trying to do. I think if it's an exit, so if you are trying to make money for past shareholders, I think you probably would offer an incentive. That's the idea, is to get the highest price for them. If it's just a listing to raise money and forward look, I think generally these days people prefer, and I personally prefer, that people are remunerated on the future performance. So yes, you might give them some more options for getting the IPO away or something like that, a special tranche, but you've still got to go and deliver the future value. So I think it depends on the reasons behind the IPO as to how you structure the incentives and the remuneration or bonuses.
Okay, and Laurie, who's responsible for dealing with the regulator?
Ultimately, it falls on the board to be responsible. You will be probably the main person, but it again depends on the market you're going to. If you're going to AIM, you'll have your nomad as part of the process. They're the person that coordinates and acts as a conduit with the regulator, which in that case is AIM. If you're on the main market, actually the regulatory side of things is actually much lower in terms of interaction when you're going to list, surprisingly. But if you're doing something like the US, the SEC, you will be exceptionally engaged with somebody like the SEC for a US listing. And in that case, it's a blend of often the CFO, sometimes general counsel, very much with whoever your reporting accountant is. That's where the main regulatory discussions will take place.
And David, who prepares the equity story and what methodology would you use?
It tends to be an iterative process. The company, you should know your own story. You know, you're living it. You're the ones that are going to be selling it. So that should be in-house and reasonably well known. The listing documentation, the roadshow slides and the slide deck, they will probably get built by the broker, by their sales team, but with lots of management discussion and input into that, which can be beneficial in terms of positioning and selling the story. But then added on to that, there's a process called verification through which anything which you're saying in those documents, you do have to go through a process of verifying, approving that the statements you're making are truthful. And that can be quite an intense process to document that what you are saying is factually sound and you've got support for those statements.
David, what IPO documentation must be prepared and who'd be responsible for preparing it?
One of there's a list of documents, quite a long list. You've notice to float, listing particulars or admission document. You've got the roadshow documents, the verification documents I've already referred to. You've got your historic financials, forecasts and projections for the business. You'll need to do a working capital forecast. Give some bios for your directors as part of the other documents. You've got all the legal agreements with negotiations with the professional advisors. You've got to appoint a share registrar, and then you need to do a report on the financial controls. Now, an awful lot of those documents are going to be prepared by the CFO. Some of them, there's a formal process where, for example, the notice to float will be done by the nomad. But those that are more of a formal thing in terms of the hard grunt work, then the CFO is the one that's going to be involved in most of that stuff.
And Leslie, anything to add on the documentation that must be prepared?
There will be additional documents that support the prospectus. Again, the CFO or the head of legal are the main leads on the supply of the content. But the advisors will be there to advise on, your progress and make sure that you're on track to actually complete them. There's also then the equity story itself, a presentation, generally a deck of PowerPoint slides that will be prepared with your input by normally your investment advisors. You will have a very heavy say in that. And that's normally the remit of the CEO and CFO to really input into that. But one of the important things to say is that when you're preparing these documents, you can't make sort of fanciful statements. You can't say, we are the largest in the UK. Everything you say has got to be backed up with evidence. So whether it's Nielsen market data or some other kind of market data. So if you say you have a 70% market share, you need to prove that you have a 70% market share. It can't be, this is what the sales director thinks. So it's a pretty tedious process because everything you put into these documents, you've got to be able to back up with very, very strong evidence. And all of that evidence has to be checked, which is why it's such a laborious and detailed process.
And Laurie, what is in the marketing process? What happens and how long does it run?
Yeah, so in terms of the marketing process, you're likely to meet some people early on for soft conversations, investors that you know to some extent, that will help you refine and tee up your story. Then the later part, you will do the roadshow. And the roadshow is where you meet 6, 7, or 8 different funds a day, might be high net worth individuals, other types of investors, and it's intensive. And the nature of that process is you go in, you will have 45 minutes to an hour, you'll present, you'll have Q&A with them. It will be you, your chief executive, and any other members that you've selected of your team that you think are best to get the story over. And you will be shipped around, mostly in London, in the back of a van, thrown in and out, and it's full on, but it's fantastic fun. But you are going to sit there and 35, 40 people a week are going to have you tell them why you think your business is good and why you should want to invest in it.
Thanks, Laurie. And Ewan, who's responsible for the communication to potential investors?
Well, everyone really. I mean, that's quite an important lesson. Is everyone on the team, management, non-executive boards, plus brokers, advisors, financial PR. You need to have the same story and keep it going in like that. What you do need to make sure that any queries do get channeled back into the core members of the IPO team who can actually answer the questions. So that's everyone broadcasts, but you want to respond to any questions back into very much into the core group.
And Laurie, how do you structure the IPO process?
Well, every one of your advisors will try and do it for you as a start. But all I would say is make sure that you take control of it. In terms of how it gets structured, there are relatively standard timetables for how these will work and run, and those vary depending on the market. But you've got to take it and basically you can adjust and adapt it to what you think is right for you, your team, your business, your company. When it comes to structuring it, whatever you set as your plan at the beginning, it will change. It will not go exactly to your original plan. That's just the way it is. So make sure you build some flexibility into your thoughts.
Thanks, Laurie. And Leslie, anything to add on that?
No, nothing at all.
So talk me through, Leslie, what are the last minute considerations?
Well, there's a lot of last minute considerations. This is a bit like sort of trying to get a Sunday roast out in making sure that everything's prepared at the same time and you haven't suddenly forgotten something. Your advisors will help you keep it on track, particularly your brokers, and you'll be having weekly or daily calls with the advisors to keep following through the timetable. But I mean, one of the key ones, and it was touched on earlier, making sure the salaries have been set. And particularly if you're with private equity owners, they're probably looking for a part exit, if not a full exit. And if it's not a full exit at that point, it will be within a short matter of time. They can impose some pretty draconian rules on the existing management about what they do and don't want them to do. They're probably not going to be there 6 months later. So some of the things to think about is that the longer term for the business, if you're going to be staying with the business for a period of 12 months to 2 years or more, you've got to make sure things are set up for that longer term. I'd also add that, it's a hell of a process to go through as an individual CFO and with the other members of the management team that are heavily involved. Getting the IPO out is not the end of it, it's the start of it. And there's a whole pile of work that follows. In our instance, we were having to put some results out. We were having to do a quarterly update, which was then a requirement of the UK market within a matter of weeks of doing the IPO. And just as you emerge exhausted from this process, you can barely gather your breath before you find the full force of the reporting process and regulations that come into play. So there's no time to let up. So that's all I think about. Last minute considerations, it's thinking about the future.
Thanks, Leslie. And Ewan, what happens on the day of the IPO?
Very little. It's the best day for ages. All the work is done. There's an announcement at 7 o'clock in the morning. Then the market opens. You probably do a couple of interviews and a bright, shiny thing like that. And that's kind of it. It's a pretty dull day. I think on Leslie's point is actually when you have to get on with running the business, because you probably spent 3 to 6 months not really thinking about that, which means you're probably on track to miss your forecast you just raised money on the back of. So life starts to get difficult again. But very, very little happens on the actual day.
Thanks, Ewan. And Laurie, what are the post-IPO implications?
You're there in the public world, and I think being picked up on by everyone in different ways. You're not done once you IPO, and you've got to plan for what you've got to do after you IPO. The reporting comes in pretty quickly. Different considerations as to how you run the business because of committee structures, reporting to regulators or the market, etc. It's a very different world to being private, and take a lot of time and input ahead of it to prepare yourself. But once you're there, just be aware that, as I say, it's not going to be the same as before.
Thanks, Laurie. And Leslie, would you agree?
Just completely agree with Laurie on that one.
Yeah.
Nothing to add.
Okay. David, question for you then. Why do some IPOs fail? I know we mentioned it earlier that they're not all successful. Can you give me your insight?
Yeah, I think there are a number of reasons why not all of them get away. Speaking from my experience, there are a number of different reasons why. I mean, there can be sectoral changes in the market. There can be wider global political changes that cause disruption that would interfere with the process. Some other interesting aspects that can affect you is other recent listings, and in particular what their price performance has been post-listing. If those other recent listings are underwater or individual funds are up to weight in those sectors, then you can be faced with a situation where people simply don't want to invest in you. They may like the story, but they don't want to invest in you because that would require them going overweight, which they're not allowed to do, or because it would mean that they're with the pricing thing that they're not confident about future growth in the short term. So those are the IPO that I ran. We did everything apart from get to that final day with a check, because of those reasons, with changes in the market, somebody being in and was underwater. But it wasn't a failure, because what that actually did was give us a very, very strong platform, not to do a dual track process in parallel, but a dual track process sequentially. So we immediately almost turned around and started going around family offices and private equity, and within 3 months we'd secured the necessary equity we needed from private equity, which allowed the business to grow and continue and develop.
Thanks, David. Interesting that. And Ewan, any thoughts on failures?
Well, events. So I mean, the one I did as principal is we finished the board meeting, and 10 minutes later the second plane flew into the World Trade Center. That rather put a dampener on market conditions for a few months, so we had to put it and then come back again later. And the other thing to be aware of is groupthink. You go around, you have these discrete meeting after meeting after meeting, but there's a fair chance that the guy at Legal and General speaks to the guy at BlackRock, speaks to the guy at wherever. So, you've got to be on your game all the way through this. If people start to have doubts, or someone doesn't like the chairman because they're in something else, and whatever it is, that chatter can grow behind the scenes. That's where you really need your broker on top of that, making sure they're getting the feedback and dealing with issues early. So even if people aren't going to invest, they're not going to go and start to poison the well. So there's quite a lot of dark arts involved in some of these processes.
Thanks, Ewan. And Leslie, what advice would you have for a CFO who might be considering an IPO?
There's quite a lot. I think you'll probably realise, if you can see the cameras for us, that none of us are over the age of 35. That's what an IPO does for you. But I think there's a couple of key considerations. One, it can be a really lonely place to do this process. The CEO is normally there just for the equity story and talking about the business, but they're not necessarily that involved. As is already been said, the CFO, a lot of the responsibility sits on your shoulders. And quite often you'll find that many of your work colleagues just do not understand the amount of pressure you're under. They don't understand what you're having to go through and how many balls you're trying to juggle. And your advisors are all really friendly, but you've got to remember, at the end of the day, they're only in this for themselves, and what their business will make out of it. They are not your pals. They're not your friends. You may go and have a beer with them or a drink after a session, but they're not going to become your best mates. And the moment this process is over, you're probably not going to hear from many of them again. So it's a really lonely place, and dealing with that at times and dealing with the pressure is hard. The other big implication, I would say, is the personal impact on your family life. This is a very, very intense process. And, as CFOs, you're used to working hard, you're used to working tough deadlines for year ends, and, other projects that you might be involved in. But this is really, really hard. And you may have to just put your entire domestic life pretty much on hold for the duration of the IPO process. And certainly in my instance, when my husband was inviting friends to stay at the weekend and organising activities to go out with them, and I was completely excluded, I realised how much my work had taken over my work-life balance. And when I said to him, well, I haven't been invited, I didn't know these friends were coming and I haven't been invited to go out, he said, well, I just know you're not going to be available. And there was one evening when we'd booked to go out to a restaurant, and the only condition that I could attend this meal was I had to leave my mobile phone behind. And that was a real big personal thing, because I was taking so many calls. And my husband said, well, you either join us at the restaurant without your mobile phone, or you can stay at home with your phone. So, that's the condition. So, don't think that this won't have an impact on your family.
Thanks, Leslie. And Laurie, what's your thoughts on that?
A word that Leslie used quite a few times there, I would just say, underline it, which is intensity. It is incredibly intense. And you will have highs and lows during it. You'll have times where you're on a massive high, you've had a cracking meeting, or something's came into place. You'll have other times where you think, oh, something's not worked out, this isn't going to pan out. And so because of that intensity, it's having people that you can talk to some extent as you're going through this. Could be friends, could be family, could be people that being mentors in your career. But having people that you can chat to throughout is something that I certainly found incredibly helpful.
Thanks, Laurie. And just moving on to the last question, then we'll take questions from the audience. Just as a reminder for those that want to put a question to the panelists, if you just pop it into the chat box located at the bottom of your screen. And over to you, Ewan. What advice would you have for business owners then who are about to embark on an IPO?
Obviously, get a good CFO would be step one. That is important. You need a proper CFO. You don't need what's now called a finance director or a group chief accountant. You do need someone who's actually going to manage the finances through the process. The other thing I would do as a group CFO, I would make sure you've got at least one person on your board who is experienced in CFOs and listed company markets. You do need someone who's been there, done that, and can help sort out any problems if they arise, because they've got the credibility to do it. You can't use, if you're an early stage tech business, necessarily the founders or academics, they don't really like the venture capitalists or the PE people. You need someone who's independent and strong in that place, just to give you that security blanket. Thanks, Ewan. And David, what's your thoughts?
Yeah, I think there are a couple of things that just picking up on what Ewan just said. I found that the non-execs that we had on the board were very, very important for developing the approach. But in particular, I had a non-exec who was an ex-Big Four partner. And he was very, very good for me just to go to in case of, I wanted to ask a question. Is this really how it needs to go? Is this the best way of handling this? It was a very, very good sounding board for me. I think for business owners, particularly those who have been running a private business, I think they really need to understand the change in the way that the business is going to be run, the increased reporting and scrutiny that we mentioned before. But also the fact that there are going to be significant locking periods for people who have shares, prior owners, which can come off at various different points in time. But then in the future, if people want to do transactions to create some liquidity, they're going to be caught by the rules around insider trading and the open and close periods for trading in shares, which again is something that people may not necessarily be aware of until it hits them. Thanks, David. So we'll move on to the questions from the audience. We've got 4 on the panel. If you just want to raise your hand if you think you've got an answer for that. So the first one, what are the panelists' thoughts on an IPO on AIM initially, then graduating to the main market at a later date? Anyone got any thoughts on that? Ewan?
Yeah, fine. AIM's much easier, but most people who do it end up not graduating to the full list because it's an awful lot of work and doesn't change the value or the liquidity particularly.
Thanks, Ewan. Next question. What percentage of the company do you put through an IPO? Are the founders not keeping a significant share? Any thoughts on that? Leslie?
It depends which market you're listing on and where your business is based, which depends on what the minimum level of floatation needs to be, the minimum level of shareholding. And I'm not an expert in every single market, but generally at least 25% of a company needs to be listed. Normally it's more than that, and you'll only get normally a decent valuation if you are prepared to put a bigger percentage on the table. Having said that, and Ewan's just said it, there'll be an expectation that certain shareholders will still have to have a lock-in. Investors don't like certainly private owners or public equity just selling everything on day one. They won't accept that. There'll be a lock-in period for a period of time for certainly a percentage of their shareholding. As regards the second part of the question, could a business mainly based in the UK with financials in GBP list on NASDAQ? So that though that isn't anything I can give an answer to. And is a valuation using a DCF reliable or EBITDA multiple? Yes to both of them, plus the fact there are having a look at the valuations of other companies in the peer group. There's a number of factors to valuation. DCF is always one, but it might not be appropriate for a business which is not necessarily generating profits.
Thank you. And another question. What challenges would a loss-making R&D business face in going down the IPO route? Who wants to answer that? Ewan?
Very doable. Quite a few people do it. The big challenge is once you're listed in the markets there, is the value of the company and the price of the share can become very, very severely separated. So you really got to make sure you raise enough money that you don't have to raise more money as a crisis point at some point in the future, because the price may be awful, you may dilute everyone and all the management get, absolutely disastrous. So if you're going to do it, as a rule of thumb, I'd raise twice as much money as you think you need, because you're just so exposed otherwise.
Thanks, Ewan. One final question. If anyone's got any other questions, pop them in the chat box. But the final question, where do you find help? Would you go to a firm of accountants or hire IPO specialists? Laurie or David, do you want to? Yep, Laurie.
Well, when I was in one of those firms, I would say come to me because I was in the firm selling my services. But I think it's not so much about the firm as what I would suggest. It's the key individuals from the firm that you get as your advisors. I know great people from different parts of the big four companies. I know other people that I wouldn't necessarily want to be the ones helping. You get great people at boutiques, you get them at special CF houses. It's just about, use your network and find people that you know that you can work with to get through this process and that have the relative skill and experience to help.
Thanks, Laurie. That's pretty much all the questions there. A massive thank you to everybody on the panel, everyone who's tuned in. If anyone who's listening wants to reach out and contact you, I know David, you're not on LinkedIn, but everyone else okay if people reach out on LinkedIn if they've got any particular questions? Fantastic. So anyone who's listening there, a massive thank you. We don't ask for any money for these webinars. All we ask is that you like and share any posts to help spread the word of the webinars we're doing to the FD community and to the advisory community. But yes, thank you everyone who's tuned in to listening. Thank you to the panelists, and I'd like to formally bring the session to a close. Thank you everyone.